Hello everyone, and welcome to a very important video on the topic of swing trading. When you are swing trading, you are trading the D1 or the daily chart of the stock, and you are intending to hold the position for more than just an intraday trade. So maybe you're holding it for a couple of days, a couple of weeks, maybe even a couple of months. There are many different timelines that you can operate with, but the underlying idea is that you are trading the longer term trend strength. And when you combine that with relative strength to the market, heavy volume, technical breakouts, bullish flags, or whatever pattern it is you like to trade, you have a really powerful edge. And if you are a trader or you want to be a trader, you must include swing trading as a part of your game plan, because if you pigeonhole yourself into I only like to day trade, so I only want to take intraday trades, you're going to miss out on a ton of excellent, huge trades that can produce massive gains that you cannot replicate on an intraday basis. And you will also be giving yourself plenty of different kinds of trades that you can take. You might be interested in selling out of the money bullish put spreads and distancing yourself from the action and collecting premium in a market where you are neutral to slightly bullish. Or you could just trade straight stock as well. And that's the beautiful thing about swing trading, is that it gives you a lot more flexibility and different ways to operate. Um, Another thing that is incredible and very important about swing trading is that you are relying on the longer term D1 picture. And what the D1 chart shows you is what institutional longer term money is doing. And in the in the case of a stock like GoDaddy, it's pretty clear. They, meaning big money, those that move markets, want to own this thing. That's why you see this really nice, tight, orderly grind higher. If there were any kind of uncertainty or people just don't want to own this shitty stock or whatever, and I'm not saying this is a bad stock, I'm talking about something like, I don't know. Let me just go to ENPH to give you an example of what I mean by crappy price action. Even before this drop here, you had very non-trending conditions, just lots of back and forth, no overall net change over several month periods. Yeah, the stock does trend well in certain parts, but there isn't really much of a longer term indication that institutional money wants this. Whereas if you look at something like GDDY, it's very clear. This is something longer term everyone wants to clearly own. And that is something that only swing trading can necessarily provide you with, or taking on that overnight risk, because on an intraday chart or a 5 minute chart, there is a lot more noise to it. And that's because these people, institutions, asset managers, and whatnot, they are not making their allocation of capital and decisions like that based on 5 minute wiggles and jiggles where there are buy and sell programs testing the bid and the ask. You have inside days and light volume. That's not what they are basing their trading decisions on, or buying and selling decisions. Um, and that's one of the things that makes day trading hard, because most of the time on the spectrum of a compressed market and an absolutely ripping, roaring higher, bullish trend day, amazing intraday trading opportunities, you're going to kind of exist somewhere in the middle. And a lot of days of go nowhere markets, or just kind of choppier markets, you generally, on average, get at least a couple days, at least. It's usually at least like 3 or 4 or 5 or even more, depending on the overall market context, where you get really nice sustained moves like this with nice orderly price action and heavy volume behind the move. Those are the days when, as a day trader, you want to strike, because on those days, you clearly have institutions in agreement, because the price and the volume are consistent, meaning you have heavy volume, orderly price movement. in this example here, there are no freaking sellers, or if there are, it doesn't matter because institutions are in agreement here that they want to buy. And again, it's not like they're looking at this 5 minute chart and saying, oh, everyone else is going long, so I got to get long. Sure, there are maybe hedge funds or whatever that could be doing that, but there are institutional players that, again, are waiting for certain opportunities, like it could be some sort of a VWAP on a D1 chart and they want to buy there, or maybe the market has pulled back to some sort of level like a VWAP-Q or an SMA 50 that is on a longer term chart and is a technical tool that everyone uses and agrees with, which, by the way, is what makes technical analysis work because others use it. You have certain just days like that that can also be because of a news drop or something that changes the longer term fundamental outlook that give you those really nice orderly movements. But that is more of the exception and not the norm. And that is why we don't trade SPY or futures, but we trade stocks with relative strength because that gives us an additional piece of success or whatnot to our trading edge. And every day there are stocks that are making really solid moves by themselves because obviously every stock, you might have news in Nvidia one day where you have a really solid move, or there could just be longer term money that's flowing into the stock after it's pulled back and found support, or is just going higher because the rest of tech is going higher and Nvidia has been leading the charge for a long time and everyone wants to own Nvidia. But even then, like, of course, market conditions overall, as in like what is SPY doing, is going to affect how aggressive you can be intraday. And in general, it's a lot harder psychologically to day trade as well because instead of, let's say, as a swing trader, you are naturally looking only at the close of the D1 candle one time a day. But if you're day trading, right, you are looking at 78 5 minute candles closing every 5 minutes. And every time a candle closes, you have to ask yourself, do I want to enter this position now? Do I want to exit? Do I want to add? Am I going to do something? What should I do here? What should I do now? And because of the natural noisy sort of generalness of intraday 5 minute chart market movement, it's a lot that's thrown at you and you have to make more decisions and it's more stressful and you're more prone to making silly mistakes, which can lead to self-sabotage and making dumb trading decisions and just lots of things you don't want to go through as far as pain and just making dumb choices. And that's another thing that swing trading is really good for, is that it teaches you how to be patient, I should say, because you're not operating under a I am looking only at 5 minute candles 78 times a day, but you're looking at the longer term D1 chart, one candle close every day. It's a lot less stressful. It doesn't take as much constant monitoring of the market. And again, you have the tailwind of what longer term asset managers, institutional money is flowing behind in the stock to give you that longer term market tailwind. So swing trading is generally easier in my opinion because of that. It gives you many more lucrative opportunities because of that longer term D1 strength being so reliable and producing these incredibly powerful D1 trends. And you want to be taking advantage of that. Another big benefit of swing trading, for instance, in a bullish market like we have been, is that when you are in at these lower levels, when support's established and the market's bouncing and you're riding those trades for longer, you are going to feel much less of a temptation to force shitty day trades that are marginal at best when the intraday market conditions are crap, because you have those longer term trades on and they are making you money and you're not operating from a position of, well, I got to make money, right? I don't have trades on, so I have to take trades intraday. And that causes you to make silly trading decisions and choices where you ultimately die a death of 1,000 cuts or whatever. Swing trading is really good for you in that mindset perspective of the pressure to force trades in a crappy environment is going to be a lot less significant when you have swing trades on, because those trades are working for you. It really does a good amount of taking that pressure off. And as I said, it will also teach you to be more patient because the action is slower because you're only looking at one daily chart candle. And so naturally, when you do have solid trading intraday conditions in the market, you will be better at waiting for the close of the candle instead of assuming something's going to happen before the candle closes or before some setup is confirmed. I think it does a really good job of translating to intraday trading if you are able to correctly and, I don't know, do the right thing and wait for those good intraday movements and opportunities where you strike harder intraday instead of just forcing trades all of the time. So it really does a lot of good wonders for you. And when you get to the point where you are confident enough and your market analysis tells you the market is going higher and the stock's going higher, then instead of exiting out for, some decent gains, let's say maybe you went long here at 175 and you exited here at 186, well, that's a really solid gain. What if instead you entered long here, you held, the stock pulled back to the EMA 8, it found support, you have a bullish flag, and then you added here at, I don't know, like 185. Well, guess what? This stock touched 200 today. That's a lot of money you could have made by just, again, patiently waiting and adding once the market, or excuse me, the stock found support. You added to it because your cost basis is much lower. It breaks out, you add even more. Like I said, swing trading can give you enormous gains that you cannot necessarily get on a day trading basis. And when you think about it, look at professional traders like Dave Wise and Harry. Those guys pretty much, like, not 100%, but damn near 100% of the trades they take, they're swing trades. They're overnight positions. And the reason they do that, as Harry and Dave have said, of, lean on the D1, is because they are relying on those longer term institutional flow of money into the stock that produces those nice tight patterns combined with relative strength and relative weakness that gives them an incredible edge. And they have the stats and the confidence to suggest and obviously continue to trade under that overnight basis of, maybe a couple of days or a few weeks out and whatnot. That is something that they do really well and with pride because it fucking works for them. And it really does work for all of us. You just have to learn how to navigate and find good setups, know when it's time to enter swing trades, when it might not be time to enter swing trades, but really think about what those guys are doing, because again, most of the trades they take, they are willing to hold overnight. And if you are spinning your wheels trying to only day trade or something, start taking some swing trades. You don't have to go balls to the walls crazy. Like, let's say, I don't know, you day trade and you trade the technicals, but you're like, I only want to risk $50 at most per trade. Then take a swing trade and only risk $25 or something like that. With let's say you went long here and you're like, I'm gonna put my stop down here. I only want to risk $10 or something. So buy your one share and see what happens. Well, the stock pulls back. It's temporarily relatively weak, but it's got that longer term strength. You're not panicking every 5 minutes. You're calmly evaluating the end of the day on the D1 chart. And then the stock starts to grind higher. And that's another thing with the D1 chart is that these moves higher and lower and the trend strength is a lot more stubborn and works in your favor. Whereas if you're day trading, your timing needs to be very precise. And when, let's say you entered long on a stock because the market just found support and the stock had relative strength, and the market grinds higher, but the stock isn't doing anything and it's losing its intraday strength, well, now you're faced with this dilemma of, Do I exit because it's lost relative strength? It's not doing what I wanted to. And so you have to start considering things like time stops, or it's not doing what you expected it to do. And that happens a lot more often on a 5 minute chart than a D1 chart, because again, the D1 chart shows you what institutions are doing long term. The 5 minute chart is not showing you that. It is a microscopic view of the D1 chart longer term. In other words, there's a lot more wiggles and jiggles happening. And so sometimes your stock loses relative strength intraday, and it's like, well, guess what? What are you going to do about it? If the stock didn't move and the market just grinded 30 points higher and it's starting to hit resistance, what do you think the stock's going to do if the market starts to drop? It's probably going to drop as well. So combine that with a situation like GoDaddy or GDDY, it's like, well, if you just sized for the D1, you could have weathered that storm a lot better and you would have had staying power. And that winner would have, or that loser, the loss you took would have been a winner if you just waited a couple of days. And that's why things like walkaway analysis works, because yeah, the stock's going to lose temporary strength or whatever relative to the market intraday, but the overall D1 story and analysis tells you what institutions are clearly doing. Give it some time, give it some room to breathe, and that trade's probably going to go in your favor. And when it does, you can add to it, you can hold on to it, let it grind higher. You can add to it with the intention of closing it intraday because you've got nice movement in the stock in the market and your cost basis is much lower. It just gives you a lot of flexibility, and you don't just panic out at the sight of every 5 minute candle because you are antsy and nervous and not confident. So I've kind of said a lot here, and I hope I'm not like going in a lot of circles, but let me make sure I talk about a couple of extra things of, let's say, I think I talked about when not to swing, but I really want to emphasize again that while I'm saying that swing trading is important, and it's very important, you can't just swing trade all the time. There are certain conditions and contexts where you need to be careful. Like, for example, this was part of the year where I got burned a little bit because I was too confident and I just truthfully didn't have enough experience to really, I had straight up just never traded in a really strong bullish market longer term because I had joined, or I started trading in the 2022 bear market, and I only day traded, and I was scared to swing trade because I was constantly worried about overnight risk. But anyways, once I was doing more swing trading here, I was still in this position of like, okay, well, I'm going to swing trade and take gains when I get a nice gap up instead of just holding that trade and riding it for longer, because eventually I may have gone long right here or something on like 5 swings. And then right here, I would exit out because I have such nice gains. But then guess what? Like the market just keeps freaking grinding higher and the stock looked fine. I just exited because I had nice gains. And then I start day trading and I start like, oh, well, I shouldn't exit because the stock looks really good longer term. I start slowly loading up on swing trades when the market's beginning to hit resistance and compress more. All of a sudden, I'm here with like 10 swing trades that aren't really doing anything. And then the market drops because it hits resistance and there's profit taking. And here I am looking like a fool going, what the hell did I just do? I thought I had this figured out. Well, clearly I didn't. I did not have the experience, even if I had the guidance of professional traders like Pete Stolzers who were saying, be careful here. Don't start opening up a bunch of swings. The market's hitting resistance. But I looked at this trend strength and I was like, well, it's just going to keep going. Clearly, right? Don't just... The moral of that story is do not load up on a bunch of swing trades when the market has been floating higher on light volume and is hitting resistance. When you see these tiny bodied compressed candles start to form, that's a warning sign. That's a sign that resistance is forming. And you don't want to just be firing off a bunch of swing trades left and right, because there's a very good chance that a long red candle like this is going to form and it's going to drag all of your swing trading positions down into the shitter. So again, in these 2 steps forward, 1 step backwards kind of market, you must be thinking in a longer term basis. The bullish trend is going to continue until it doesn't, and you have to wait for technical confirmation of that lower high, double top, breach of an upward sloping trend line, and so forth. Do not assume like the market's going to hell in a handbasket and we're never going to look back, because once support's established and you bounce, the market just floats right back higher. So you want to be opening up your swings at those times when support's established, because that's where you can ride those trades and get nice gains. I talked earlier about you don't want to just be opening up a bunch of swings when conditions are volatile. You always need to know when to sit on your hands and wait and be patient. And that I think is easier perhaps to do on an intraday basis if you just understand, for instance, that inside days with light volume aren't high probability trading conditions. Well, you're obviously hopefully not going to go out and force trades. But if all you do with your trading is you only trade trend days in the market, or let's say in the context of a longer term bullish uptrend, you only day trade on days where the market gaps down and finds support and starts to reverse that gap where you can join the longer term trend, then ultimately that's probably at least a few days per month. But on those days, you can day trade with full size, full confidence, and ride those trades hard because the intraday price action looks incredible. And you can add with confidence and you can get really, really nice gains. But that's not going to happen every day. And so you're not going to be pissing away your money when you have really tight, compressed intraday ranges with light volume where the market's doing absolutely nothing. But you've got swings on from this lower position here. So you're not forcing those trades and you don't feel obligated to do so. And then guess what? The market just starts to grind higher and you're making even more on those longer term swings. And that feels really fucking good. I will say that. So like I said, if all you do is just day trade a few times per month on those trend days or those days where it's obvious to even a baby that these are excellent intraday conditions because you've got heavy volume, orderly price movement and whatnot, and then you are day trading in the context of this longer term 2 steps forward, 1 step backwards market where you wait for your opportunity to load up on some swings like after a pullback that finds support and a bounce. Honestly, you can make an excellent living doing that because you're not taking marginal trades. You're trading with the longer term strength. You're trading and picking your spots well. You don't have to take a million trades a day to make money. You can really just take a couple trades a week. But if you're trading with full size, you can make a fuck ton of money. You don't have to every day find 4 trades to trade at a quarter size position to make, I don't know, money to go buy McDonald's or whatever it is. And it's going to be a hard time because the movement is choppier. You have less confidence. You're going to feel more scared. You could just wait for those high probability conditions, both intraday and on a swing basis, to fire and go, go, go. And you can make really good money, like I said. What else is there I want to talk about? Yeah, and I don't know, as far as mindset goes, just no matter the time frame you're trading, just always have a plan before you enter a trade. Don't be the dog chasing cars that finally catches one but doesn't know what to do with it. Or don't break your rules. Don't hold like let's say your stop was VWAP and you held through it and the stock's at the low of the day and it's making a new low of the day. Like, don't hold through that shit. That's not good for you. Make sure you plan your trades out well before you enter them, what you expect to happen, what you don't want to happen, what you would like to see, what would compel you to add to the trade with technical confirmation, what would tell you to exit here or there, either if the market does this or the stock does that. You need to plan well. You also need to know yourself well as a trader, and that's where experience comes in, because as you trade, no matter what, even if you do this thing where you're really patient and you pick your spots well, you're still going to have losing trades. And you need to understand those emotions as a trader. You don't want to suppress them. You need those emotions because they tell you a lot about yourself and where you may be vulnerable to making silly decisions and trying to revenge trade or overtrade and whatnot. Those emotions are really important, and those thoughts that you have, you need to make note of that in your trading journal and keep in mind of it so that you know when it's time to just get up and walk away from the screen for 30 minutes or the rest of the day after a loss or something. Being able to do that is humbling and it's really powerful, and it's going to help you mentally reset, take a fucking break. It's like athletes who get an injury, they're not going to go out on the field and try to uh, play basketball with a torn ACL unless they want to make it way worse and lose. They're going to rest. And it's kind of the same thing for trading with your mindset and psychological capital. You don't want to be operating from a point of emotional, I don't want to say weakness, but just when you're feeling vulnerable emotionally or physically or mentally. That's not when you make money. And the same thing goes for scared money doesn't make money. If you're not confident and you don't have clarity, then don't force a trade. Instead, get up and give your mind some clarity by going for a nice walk outside on a sunny day. That will do a lot more for you in the long run with your trading and your mental health. Um, Trading really is kind of a holistic process, and you need to take care of yourself physically, mentally, emotionally, and so forth. So remember that cash, of course, is a position. Like I said, when you don't have clarity, don't take trades. If you are in a situation of analysis paralysis, that's probably a good indication that you're not feeling very confident. In that case, you probably shouldn't take the trade. Or if you're going to take the trade, just trade really small size and let the trade breathe and unfold and don't freak out. Um, on top of all that, walkaway analysis is really useful. Again, if you are constantly in and out of trades because of intraday noise and whatnot, um, you're probably going to find your walkaway analysis show you that if you just waited for a day or two, the trade would have been profitable. And again, thanks to the power of the D1 chart in the stock and relative strength and whatnot, that's basically why. It's just the wiggles and jiggles intraday got you. So if you sized appropriately and you waited, you would have had a winner instead of losing. So I am out of breath, and I think I've covered everything I wanted to. Oh, I did finally spend a lot of time studying options and how to trade options. And I know that people in the past have asked me, do I trade options? Do I plan to trade options and so forth? Um, and my answer to that really is I don't feel like I have to, other than one strategy I do like are selling out of the money bullish put spreads. That is something I am much more willing to do, especially on a stock that like I'm again neutral to slightly bullish, but I don't think it's going to really be like moving around in some sort of significant way. Like a great trade for that the other day was Apple that Harry had brought up. If you sell an out of the money bullish put spread off of this 225 level, you could get a 225 220 bullish put spread for $1 credit. That's really good. You've got multiple levels of support here with AVWAP. You've got this upwards big trend line that will eventually come into play here. I wouldn't necessarily want to go long on this stock with shares because it's not really fucking doing anything. But yeah, I'd sell a put credit spread or bullish put spread on this. But even for things like buying straight like calls on something, like I feel like I don't necessarily need to do that. And I'm not even trading like a humongous account or anything. Like I still feel like I can produce really nice gains with straight shares. And at some point, you know, if I have a large account, then I wouldn't even think about like just buying straight calls or straight puts, because I have enough money to just buy a bunch of shares. Like that's kind of what Harry does with his swing trading is he does a lot of trades where he just buys a lot of shares or shorts a lot of shares because he has the capital base to do so to produce really, really solid gains. Of course, there are exceptions to it. If I have a really expensive stock or something like that, that's like $1,000 something, then sure, like I might consider doing like a call debit spread or something to cap my risk, and to try and capitalize on a shorter term move that I don't necessarily want to hold for more than a week or whatever. But even then, I feel like that's not necessarily the norm, and I just feel like I can really do with what I need and want to do with my trading by just primarily trading straight shares and, of course, selling credit spreads when I feel appropriate to do so for a specific stock and market context or whatever. Oh, I know one thing I did want to bring up with regards to swing trading. When you're holding overnight, let's say you're looking at a stock like, uh, I don't know, what's a good example? Maybe something like Reddit. Yeah, Reddit's a good example. Reddit has popped the fuck off over the last couple of months, or I guess last month after this earnings. This thing has basically gone, I don't want to say fully parabolic just yet, but it's got a really nice big move. And Pete has been saying this is going to be a really, really, really solid longer term swing trade. And you look at this and you look at the ATR and you're like, what the hell, $10? Like, that's so scary. Like, I don't want to swing trade this. Well, guess what? Sure, like the ATR is $10, but more often than not, because of things like longer term trend strength, relative strength, heavy volume, that ATR is going to operate in your favor much, much, much more often than it is going to go against you. And why is that? Well, because the longer term money clearly wants to buy this stock. So this stock is going to be much more inclined to move higher. And that's exactly what it's done from like this point, for example. It's just gone higher. And thank you, nice $10 ATR. This is a stock that I have been swing trading for a couple of weeks now. I don't always post every single trade of mine into the one option chat. In fact, I actually don't really do a lot of that anymore, but that's besides the point. The point is that this is a stock that has been on a freaking tear. And if you're scared of this ATR, remember, combine it with your analysis on the longer term D1 chart. That ATR is going to go much more likely in your favor, especially when you have the market on your side and that it agrees with you on the longer term context. So, I think I've said everything. My voice is starting to hurt. I hope this was not too unorganized and all over the place, but if you have questions about really anything with regards to trading, feel free to post and I will get back to your comments. But hopefully, if you've been on the fence and are uncomfortable with the idea of swing trading, hopefully I've convinced you to start dipping your toes into the water to do so. Because like I said, swing trading is going to do a fuck ton for you in terms of making really good money, not feeling compelled to force marginal trades in low probability intraday trading environments and so forth. And it just opens up so many more potential trades beyond just what looks good for a day trade and whatnot. So anyways, hopefully I was able to convince some people and also reinforce to everyone else that no shit, swing trading is good. Perhaps this video isn't for you, but hopefully you were still able to get something really good out of it. So anyways, I'm done. I'm done talking. Enjoy the rest of your day and have a good holiday week. See you later.